Understanding Fixed-Rate Loans. A simple guide. Hello everyone, and welcome to today's video. In this session, we're going to explore the concept of fixed-rate loans. This is a crucial topic for anyone dealing with loans or finance. Let's break it down together in a simple and easy-to-understand manner. A fixed-rate loan is a type of loan where the interest rate remains constant throughout the life of the loan. Unlike variable-rate loans, where interest rates can fluctuate, fixed-rate loans offer stability and predictability in payments. This is particularly useful for budgeting as your monthly payments won't change over time. One of the main advantages of a fixed-rate loan is the predictability of payments. It's easier to budget and plan your finances when you know exactly how much you need to pay each month. Additionally, fixed-rate loans protect you from rising interest rates. If market rates go up, your rate stays the same, saving you money in the long run. However, fixed-rate loans can come with higher initial interest rates compared to variable-rate loans. It's important to consider this when choosing a loan. Also, if market rates fall, you won't benefit from the decrease as your rate remains fixed. Carefully weigh these factors against the security of a stable rate. Fixed-rate loans are ideal for those who prefer stability and consistency in their financial planning. They are especially beneficial in a low-interest rate market and for long-term loans like mortgages, where the predictability of payments is crucial. I hope this video helped clarify what a fixed-rate loan is and whether it might be the right choice for you. Remember, understanding your loan options is key to making informed financial decisions. Thank you for watching, and I look forward to bringing you more helpful content in the future.